Hello and thanks for joining us for France 24's business interview today. More than ever before, we've seen the degree of impotence of world leaders faced with the Eurozone crisis. The drama from Athens has thrown the best laid plans of Eurozone leaders into chaos, and it threw a huge spanner in the works at the G20 summit over the past 2 days. The get-together in the south of France was meant to allow French President Nicolas Sarkozy to demonstrate his leadership, but months of planning were banjaxed by George Papandreou, the Greek Prime Minister, and the Greek situation. Now, for more on this, we're joined on the line by the Chief Economist for the Royal Bank of Scotland, RBS, in London, Jacques Caillou. Monsieur Caillou, thank you very much for joining us. We have been seeing in the past days and weeks, everyone is running out of patience with Greece and the Greeks. Would it not be simply better to cut them loose?
Well, it's very clear that the call for a referendum in Greece couldn't have come at a worse time. There was some starting of a momentum building out of the EU heads of state last week, and the hope from Europe was that this momentum would have continued going into the G20 and possibly getting some additional financial resources coming from outside of Europe. And clearly the call for referendum coming from Greece through this on the sideline, and the focus came back right on the Greek situation. So clearly a very difficult situation. And I think the response from Germany and France probably was the right one, which was to put Greece on facing the right question as to whether they wanted to stay in the Eurozone or move out of the Eurozone. And I think that probably might contribute to a turning point in the Greek political landscape and might actually unfreeze the political gridlock in which Greece is finding itself in at this stage.
Does that mean for you the only way to get things to move forward is to basically blackmail Greece?
Well, this has been the case since the beginning of this crisis, and the mechanisms under which the IMF and Europe disburses cash to Greece is very much a bargaining on a regular basis, and we've seen it on the quarterly basis, a rolling crisis in a sense, where the cash does not get disbursed up until you get at the last minute a deal being struck. And I think we've reached that tipping point last week or this week with the referendum call, and basically Europe drawing a line in the sand and basically saying that, you know, if you have 110 or 130 billion of aid coming through, this is absolutely not the time to question that. And I think now Europe has really changed its stance on Greece, and we're very much reaching the tipping point on that front. I mean, it's absolutely clear.
You mentioned a tipping point, you mentioned lines in the sand. Does that mean we've already seen that Merkel and Sarkozy have both broken the taboo this week of Greece leaving? Does that mean a breakup of the Eurozone, the single European currency? Is that viable?
Well, I think if you're looking at, from a broad perspective, this is a political project first and foremost. And so the prospects and the future of the euro area will be decided at the political level. We can decide the implications from an economic standpoint and the difficulty from a legal standpoint in terms of dismantling the monetary union. But first and foremost, this was originally a political project, is still a political project, and if there is a member country that decides to walk out, however difficult it is legally speaking and economically speaking, we live with independent sovereigns and in democracies, and the populations will have the right to present views on whether they would like to stay in or stay out, so how difficult that is. And I think the fact that we have now politicians discussing it openly, I think is probably doing some good from a financial market standpoint. I don't know what how the next few weeks will be as far as Greece is concerned, but certainly I think the opening up this debate, I think, was necessary, and it might contribute maybe to a stabilization of the situation, not in the short term, obviously, but in the medium term. I think that debate needs to take place to try and strengthen the system from a political standpoint. It might require a deepening of the political crisis, but I think this is a necessary development at this stage to try and move on from this very, very difficult situation.
You mentioned the political crisis there. Another political crisis is brewing in Italy. is the situation in Italy, is it the problem, is it Silvio Berlusconi or the Italian system itself?
Well, when you look at the Italian economy and you look at the bond market in Italy, really the macroeconomic situation over the past 6 months hasn't changed that much. The political situation hasn't evolved that much. The prospects for growth are weaker, but overall, what has happened is the contagion from the peripheral countries reached Italy during the summer months. And so it's this non-linearity in bond markets that basically put Italy on the brink with a spike in the bond yields of Italian sovereign bonds. And that is the real weakness of the system currently, which is a loss of confidence in the financial markets can basically bring a country from a good equilibrium or a stable equilibrium to a bad equilibrium and make that country look like it is insolvent. But it is the nature of the market and the weakness of the monetary union that allow those transmission channels to materialize. And it is the ring fencing of these countries which is so critical and so necessary at this stage, and it is unfortunately still missing. So Italy has weaknesses, they are well known, they've been known for a very long time, but what has changed is the power of the contagion in financial markets to reach out countries as large as Italy. And the difficulty now is to move that country back in a good equilibrium.
Moving on now to some of the conclusions of the G20 summit, that we are getting some idea of them. Nicolas Sarkozy, the French president, has promised that there will be some talk of the tax on financial transactions. However, that does appear to be within the Eurozone and not without. Does that mean it's going to basically not really come to anything? Without the support of Anglo-Saxon nations, this won't work.
Well, I mean, we'll have to see. I think that there is obviously a willingness from Europe to go and continue the discussion as far as the financial transaction tax is concerned. I think Sarkozy mentioned that there was some movement on the front of the US, that they are open to discussing the topic, which is a change probably compared to a year ago. So I think these discussions probably will continue going into the next G20 meeting in February. And Sarkozy did mention that there had been some progress on that front. It's going to be difficult if it is only at the European level. It is difficult from an implementation standpoint to put in place those transaction taxes, because markets do tend to try and avoid those taxes. And because of the globalization of financial capital flows, you would potentially see some of those financial transactions taking place outside of the European Union or the euro area, depending on which countries would face those transaction taxes. And so that would make it very difficult to be implemented just at a regional level.
You say the markets are going to want to avoid those transaction taxes. That's a bit rich, isn't it? Many of the banks and the sectors were bailed out just a few years ago. It's a bit rich for them to refuse to pay an extra tax now.
Well, I mean, if you can conduct a financial transaction in Germany, for example, and that transaction is taxed, the incentive structure in the system is such that that financial transaction will have an incentive to take place somewhere else in the system which doesn't have the tax. I mean, that's the reality of the financial markets globally. They're financially integrated, and so these are the rules of the games. I mean, there is a need of an agreement at a global level if those transaction taxes are to be efficient.
Monsieur Caillou, what I mean is that shouldn't the banks pay some of it back, some of the money that helped them bail out via this tax for the future? For a kind of an emergency fund for the future?
Well, that's for the policymakers to decide as to how they will implement those taxes, and whether they want to tax the institutions or whether they want to tax the transactions. It seems that the debate at this stage is on the transactions, and given the integration of financial markets, transaction taxes are difficult to put in place. I mean, this is just the reality of financial markets, I'm afraid.
The reality of the financial markets, as well, in the past couple of weeks, is that, especially in the US, is that on Wall Street they're actually at a year high. They're back in the black for the week. Does that mean the market model is not really functioning anymore? We see the crisis, but on Wall Street they're still making profits.
Well, I think, financial markets are, fear, uncertainty, and if financial markets face uncertainty vis-à-vis, sovereign risks and regulatory risks, it contributes to additional volatility in the market. And so, financial markets hate volatility and uncertainty. I think if the regulatory framework is clarified, financial market will stabilize and will learn how to live with a new regulatory framework. There is a need for reform of the financial architecture of global financial markets. This is part of the agenda of the G20. This is a difficult discussion because there are different objectives that need to be reached depending on which part of the system you're looking at. But there is a need of a reform of the financial architecture of global financial markets. And once that new regulatory environment will be stabilized in terms of the discussion at the policymakers' level, financial markets will then stabilize themselves. The discussion at this stage is contributing to some of the uncertainty that we're seeing in the market. But there is a need of a new regulatory environment. It's being discussed, and it will lead to a new regulatory environment.
Jacques Caillou, the Chief Economist of the Royal Bank of Scotland in London. Thank you very much for your time. That's all we've got time for in the France 24 Business Interview. Do stay tuned to France 24 for more news and analysis after the break.